Ever been in a situation like this? When you watch the stock market rise and fall, it's like a roller coaster ride inside you, wanting to take advantage of the opportunity, but also afraid of losing all your money by accident. Today, I'm going to tell you the story of an ordinary investor and see how he got out of the market's emotions and found his way to sound investing with the help of the classic book, The Intelligent Investor. Alex had entered the stock market, like most people, with dreams of getting rich. At first, he kept a close eye on the market every day, trying to capitalize on every opportunity. However, when the market suddenly plummeted, Alex's heart sank. He realized that he was not investing, but playing a heartbeat game with the market's emotions. Every rise and fall left him distracted and sleepless at night. One day, he happened to turn to a book, The Intelligent Investor. A quote from the book touched him deeply. Investing is not about chasing the ups and downs of the market. It's about protecting your wealth with reason and discipline. Alex decided that he could no longer be led by the market and that it was time to make a change. Step 1. The choice between investing and speculating. Graham, the book's mentor, begins by demystifying the difference between investing and speculating for Alex. Your past operations have been speculative, seeking short-term windfalls at the expense of the safety of your principal. Investing is about steady long-term gains through rational analysis. Alex finally realized that his previous buying and selling was not investing, but gambling with the market. Speaking of which, are you also remembering your own experience of chasing the market? One minute you think the stock is going to rise to the sky, the next minute you're afraid it's going to fall to nothing? Believe me, you are not alone. Many people have traveled this road. Let's take a look together and see how Alex came out of it. Step 2. The wisdom of two types of investors. Next, Graham shows Alex two paths, the defensive investor and the active investor. If you want solid, long-term returns, you can be a defensive investor, diversifying and reducing risk. Or if you're willing to spend more time studying the market, you can be an active investor, looking for undervalued opportunities. Alex recalls his friend Tom, who had invested all his money in tech stocks when they were soaring, but quickly lost a lot of money in the pullback. Another friend, Susan, had been using a solid strategy that had slow returns but never experienced major ups and downs. Alex decides to combine the two, staying steady while looking for opportunities at the right time. Step 3. The teachings of Mr. Market. Mr. Market, this is an interesting analogy that Graham recounted to Alex. Mr. Market will give you quotes every day, but his moods fluctuate wildly, sometimes outrageously optimistic, sometimes unreasonably pessimistic. All a smart investor has to do is evaluate rationally and wait until he's in a low mood to seize the opportunity. Alex realized that he had always been led by short-term market fluctuations in the past and had rushed to sell when the market panicked, instead missing out on subsequent rallies. He decided to stop being swayed by market sentiment and focus on the true value of stocks. Have you ever also panicked during a stock market crash and couldn't resist selling your stock at the lowest point, and then watched it go back up again? The story of Mr. Market reminds us that emotional decisions are often the worst enemy of investing. Step 4. Balancing risk and reward. Over time, Alex learned how to balance risk and reward. He spread his money across different sectors and assets to avoid putting all his money on one card. He also learned that the pursuit of excessive leverage, while potentially delivering quick returns, also hides significant risk. Once, Alex's friend Jack used high leverage in the market in an attempt to get rich overnight. But Alex advised him, the market doesn't have opportunities every day, and excessive risk-taking can lead to big trouble. Jack didn't heed the advice and ended up losing a lot of money in a market shock. Step 5. Persistence and the fruits of victory. Years later, Alex's investments began to grow steadily. Although his gains weren't as impressive as those of his friends who had gotten rich in the short term, he never experienced the kind of painful losses they did. When the market fluctuated dramatically once again, Alex remained steady because he knew that consistent and rational investing over the long term was the only way to achieve sustainable returns. He was proud that he had not only beaten the market, but also his own emotions. He finally understood the true wisdom of investing. It's not about predicting market fluctuations. It's about sticking to your rational strategy. Alex's story tells us that market volatility is inevitable, but we can choose to deal with it with reason and wisdom. The Smart Investor is a book that teaches us not only how to invest, but also how to control our emotions and make long-term sound decisions. Have you also experienced the anxiety that comes with market volatility? And how did you cope with it? Feel free to share your story in the comments section so we can discuss more investment wisdom together. If you find today's story helpful, don't forget to like, share, and follow us for more great content waiting for you on the road to investing in the future. You, too, can be the next smart investor.